Good evening, everybody. This is Jeff Scott, and welcome to tonight's broadcast. It is July 21st, 2013. It is approximately 10 p.m. I'll do this for about an hour. If you've not looked yet, the market futures look surprisingly strong. Maybe it's time for a climax run before we get out of a strong month and into a couple of weak months, but we'll talk about that as we go. For those who've not been here before, the disclaimer, as you can see here, I am an independent. I don't sell you anything most of the time. I don't charge for these, and I'm doing education, not investment advice. You'll make your own trading decisions, and the worst thing about anybody telling you what stock to buy and why I always am afraid to do it, because I'm not there to tell you when to sell. And as my wife has frequently reminded me, profits don't count until you sell the stock. I'm a doctor, not a broker, and most physicians lose their money with their investments. And as I said, I'm independent, although I have a strong relationship as a friend of HGSI. I currently am not affiliated financially with any software vendor or trading company. All the tools that I have I've acquired personally and paid for them, and what I show you is what I normally do. For those who have been following me for a long time, this is the first broadcast I'm doing since moving down to South Florida. I have a great view, although it's night now. To the left of me, I can see the ocean or hear the ocean because it's kind of black. And over, as I go further to the right, I see downtown West Palm Beach across the intercoastal as I've now moved into Palm Beach County. So Myrna, if you're listening, time for dinner. So as I go forward, I play with a lot of different programs. Was noted by Paul today that seasonal analysis is now included in Thinkorswim, so I'm going to be playing with that tonight and tomorrow to see if it replaces some of my programs I have to pay for. But I need a lot of different things, but I don't need everything that I've ever bought. I need a real-time platform. I use TradeStation and Thinkorswim. I need a product for analysis, of which I don't think there's anything better than HGSI, and I think I'll show you that tonight. I use EdgeRater for some market timing as well as back-testing thoughts that I have in HGSI. ETF Bandit is a program that automates a lot of the counters and other techniques in ETF trading. Also from Chris at edgerater.com. And then for seasonal analysis, I've been a long time seasonal follower. I used Best Choice for a while. I play a little bit with TradeMiner, but what I really like is Magenta Trader. And then, as I mentioned, I'm a big fan of Ian Woodward and Ron Brown and their various tools that they have in the market. You can stop this and look at it yourself, but the best thing anybody ever told to me was this guy right here, Ian Woodward, in the early 90s. He said, "Jeff, I'm not a guru. I'll teach you to be your own guru." Well, I certainly wouldn't say that I'm a guru either, but I think the important thing is that you have to learn to make your own decisions, and I thank him for that. Next to him is Ron Brown. They're the powers of Woodward and Brown Investing. Books from Alexander Elder, O'Neill, Morales and Catcher, Bigelow's Candlesticks, Pascal Willane on institutional volume, Van Tharp on position size and money management, so important. Ronald Brunke, something that I pay more attention now that I'm retired, about how to create income from my wealth. Some of the websites that I use, again, you could stop it if you need more of this. So I have a number of people ask, well, what do you actually do? How do you trade? What makes sense to you? You talk a lot about different stocks. How many you actually own? So what works for me? I trade equities, stock options, and index ETFs. I don't like to short individual stocks, but I do like to buy puts on them, and I'm a frequent purchaser of contrarian ETFs. I probably should be shorting individual stocks because on the puts I'm paying a premium, and on the contrarian ETFs, I'm sure I'm paying some fees on those baked into the price. And as somebody once pointed out to me, if you take FAS and FAZ, which are corollaries of each other on the 3X financials, and you track them over time, they don't go sideways, but they actually, when you combine them, they actually drop. So there is a cost to these contrarian ETFs. None of those are investments to me. They're more trading vehicles based upon what the market is doing. If you've been on these calls before, you know I spend a lot of time on the market. By far the most important thing for me as I make my decisions as this weekend goes on is what is the market doing. When I sense weakness, I reduce and eliminate margin debt. Yes, that dirty 6-letter word. I've been using margin off and on for 20 years. I will tell you it got me clobbered in the early days until I figured out to get rid of it in tough markets. And what I like to do is I like to take more and more margin as the market gets to a top, and then before it rolls over, I start eliminating margin. So I have clearly been in margin elimination mode. I learned to take profits along the way. Now, I'm not really good at taking partial profits on positions, and maybe I need to learn to do that. But I do take profits. I sell winning positions. I try to sell losing positions as well. Now, when I sense weakness in the market, there are some things like one of my businesses got bought by a public company, Cardinal Health, so I sit on a lot of their stock. I remain, although I'm no longer working there, bullish on that company over the long term, and I may just write calls against some of my positions that I don't sell. You know, you can pick up over 3 months, maybe 5 to 7% premiums on the cost of your stock, and that helps me to deal with some of the potential losses I'm going to take. I will take what position I have and protect it by buying puts on index futures and specific stocks, and I buy contrarian ETFs. So if I sense weakness, I try and get net neutral to negative. One of the things that's hurt me in the past is sometimes I take too long to get rid of my negatives, and it reduces my upside at market turns. But I'm doing it to protect me, and the cost of that, just like any insurance policy is, you give up a little something. And I hesitate before adding any new net long positions when I sense weakness in the market. Now, in an upward moving market, I try to find specific setups. So what I'm going to look for today are the strongest groups, the best stocks in those groups, and then try and find stocks in those leading groups that are leading, that are giving me an opportunity with a pullback. So I want pullbacks and leading stocks in an uptrend. I do not like to buy stocks below the 200-day moving average, and I prefer not to buy stocks below the 50. It takes a special situation. And then once I've identified tonight some of those stocks that fit, then I'm going to put them in a list and look for evidence of momentum. Now, a setup for me is a pattern that I see at night. The trigger is what it does tomorrow. I look for multiple triggers. I look for Bible gap ups and pocket pivots, things that I've learned from listening to Gil Morales and Chris Katcher and reading their books. I look for kahunas, eureka, and bongos, things that we find in HGSI, and things that have been taught by Ian and Ron. I look at specific patterns in the force index and, frankly, the bongos of looking for the long duration indicator to remain positive, and then look for the shorter term indicator to go negative, showing a pullback. And then when I see that starting to change and revert back to positive, that tells me it's a stock that's in a pullback, allows me to screen. I look for institutional volume as defined by effective volume by Pascal Willane in his book. And I think that the folks at www.neverlosttrading.com have done a great job of creating some indicators that I use specifically in Thinkorswim that help me to find institutional volume changes when money is moving in or out of a stock. I love candlesticks, which I've learned from Bigelow. And then I got to listen to, it was funny, I was working out in San Francisco, and I was staying at a hotel, and I saw the sign that some guy named Elliott was giving a free seminar. So you know what that means. You go in, you listen for 4 hours, and you end up spending a lot of money buying their CDs and their books. Well, that's exactly what happened. I had the pleasure of listening to this great guy, David Elliott, talking about things such as green candle lows, red candle highs, squeezes, no-bows, among others. And I use them a lot in my trading. I call the Elliott indicators. Unfortunately, David Elliott passed away maybe 18 months ago, and George Lee is a big fan of his, and I learned a lot of this from George. So during the day, I have all the prior triggers coded in multiple platforms. I keep a large active watch list. I have alerts when my triggers are fired. And if I'm not at my trading desk, now that I'm retired most of the time, although I do consulting, I've automated some of these. A lot of times I'll see things at night, tonight, that I might want to do tomorrow, and I may build some conditional orders. And I try as much as possible to automate my exits, to eliminate emotions, and also to protect me if I'm on an airplane. I've shown you the same picture the last couple of times. The point here is July is a happy month in the S&P 500, really happy in the Dow, a little bit less happy, but still happy for the NASDAQ. Happy meaning it's a bullish month. Kind of exactly how it's gone, frankly. But look at August and September and all these indices, especially the Dow. Big stocks don't do well in August and September. So if you think we're due a correction or we're overdue a correction, I know many of us do, we're probably getting to a point where the time is working against us from a seasonality perspective. I always want to know where we are, and what I keep saying is I keep thinking we get to this red dot, a red circle, and then we take another leg up. And it looks like we're going to roll over. We get a 3 to 5, 7% correction. We take another leg up. So I don't think anything is different except we ended the last 2 weeks in a very strong leg up. And with those futures, it kind of looks like that may continue, although things change a lot often before the morning. Quick promotion here. High Growth Stockware is what I'm going to use most of this evening when I do my top-down analysis. It is an outstanding program. You can find it at highgrowthstock.com. And just a couple of words about it from the website. highgrowthstock.com, a free 30-day trial. A number of things that I won't be using with the multi-view charting and different windows, pie chart analysis. There are a number of folks who are active contributors. I post all the things here. And in fact, on Thursday night I said, thought this was Thursday night. I guess the date's not right. That must be a different one. Oh, this is going back a couple weeks. I'll often post things that we'll put on the blog as well. But all my webinars are there that I've done. Ron Brown, under Investing Strategies, he does things on a frequent basis, a lot of how to use the program. I talk a lot about individual stocks. Ron will talk more about the market, top-down, looking at groups, but also how to use the program. Ian has an outstanding blog, which it's a good sign that it's not updated, because during times of market angst and changes, Ian seems to update his blog every 3 days. So that means he hasn't totally given up yet on this market. And all these things that I've shown you without logging in, so they're free. A couple of events to let you know about. Let's see if it's under here. We have the next workshop, which I highly recommend, in California in October 2013. Best 3 days you'll ever have of trading. $12.75 seems expensive, but it's not compared to what you get. I've been to every one that they've had in Palos Verdes, except for 1 or 2 when I couldn't get off work. And I even saw these guys at Telescan days, which was in the 90s. Will never miss one as long as I can. The problem is this little spry young fella here, Ian, probably not going to be doing a lot more of them. So this is, I hope it's not our last chance to spend time with Ian, but he's just outstanding and you don't want to miss it. Once again, in case you just came in, futures off a little bit off their highs, but certainly positive at this point of the day. So enough background discussion, and at this point I want to jump into looking at the market, and I always like to start and get a sense of where the market's been over the last couple of days, the last week or so. So one of the things I could do is pull up the S&P 500 in HGSI, which I'll do in a few minutes. But what I really want to do is look at a couple of the things that I look at routinely. I like Elder's interpretation of price bars. He's got a thing called impulse indicator, which blue means I can do whatever I want, Green means it's buy or hold, and red means it's hold or sell. So we can see on the NASDAQ, when it got down here, it stretched below the elder envelope, which is his take on volatility bands, and then it came back in and turned to blue, which was the time to start thinking about buying. And then it had just a massive run-up, got outside the bands here, and pulled back in last week, especially with the Friday challenges of the big boys, Google, Microsoft, and Intuitive Surgical, and still remains blue, which means it's your call, still buyable. I commented last time that just because you get outside the volatility bands doesn't mean it's, the auto envelope doesn't mean it's over, and you can see back here in May in a very strong market, you went 3, 6, 10, probably 3 weeks in a row without coming into the band. The weekly and the monthly are green. From the histogram, this peak had a higher MACD histogram, so I'll say no obvious divergence there. If I look at the Dow, and the Dow obviously on Friday perhaps was stronger, but the Dow, the same thing, has come inside the band as blue. And again, higher high on the MACD, at least on the histogram. So no histogram divergence, green on the weekly and the monthly. On the S&P 500, again, probably stronger certainly than the NASDAQ, continues to push high, tracking up the upper envelope blue with green weekly and monthly. So at least looking at my elder indicators, I see a market that is still up. So I want to look on the long side, although based upon my comments about the seasoning and timing, I keep in the back of my mind that we are in a very risky period of time. Let's talk about the market last week. So one of the things that I like to do within the program is called a group performance analysis. And I run this probably daily so I can get an idea of what groups, types of stocks are actually working, and trying to make sure that I'm buying the right types of stocks. And it's built into HGSI. You can identify as many or few groups to track. You can pick the starting date and the ending date, and I usually go Friday to Friday, buying at the close and selling at the close. So obviously, if the market gaps up or gaps down on Monday, it skews your individual performance. But I assume static list Friday to Friday, and as I pointed out, whether I have a good week or a bad week, the stocks I end the week on don't necessarily represent what I ended the prior week on because I do trade during the week. But it does give me an idea on the type of stocks that I track. So first thing you notice is a lot of black, more red than the prior week, but still not a lot of red. Now some interesting things popped up here. GIF All-Stars, which is, we'll talk about that as another trick in HGSI called Group Inclusion Filter. Those are usually the leaders. And they were the laggards last week, as well as the best of Woodward and Brown were laggards. And that's kind of unusual because these would represent the best stocks in the market the prior week. Even the top Vector Vest by VST and the IBD 8585, which is that weekend review, I think comes on Friday, all of them did poorly. And some of my favorite things, Sprinters, Ian Point Score, Viable Gap Ups greater than 1%, and BGUs from a different test, all were underperformers. That's unusual, and it may mean we saw some crap off the bottom move up this past week. If you look at where the S&P 500 was, it was up 0.71%. So that's the benchmark. IBD 50 a little bit below that at 0.54. And the let's see, the HGS 100 and the buy list that I put out last weekend were up about 1.3, so nearly double the S&P 500. What was working? Well, this was, the prior week I had a good week. This week I had a great week as well, up 1.89%. And why I say it's a great week is because I'm up 2.5 times what the S&P 500 was. That's a big week for me. Green candle lows, something that I talked about from David Elliott and George Lee, these are stocks that it's almost a one-day reversal pattern because they had to trade below yesterday's low and typically open below yesterday's low and close above the midpoint of yesterday's bar. So that means we have a green candle because it closed above the open, and it took out the prior low, and I'll show you those on charts, but they may represent a bottom in an instrument, and it's one of the things I like to use. So if it was junk off the bottom, these might have identified stocks off the bottom up 2.73. Pullbacks had a great week, and pullbacks are things that I look for 3%, and I'll show you the difference between waiting for a signal and ready to run. And interestingly, the leading group were stocks breaking down, which are leaders that have pulled back. So it was a pullback week, and since I started off this presentation by saying I like to buy pullbacks, then I should have had a good week, and I did. Bucketology, again, I'll refer you to prior reviews, using EdgeRater to take the 1,500 stocks in the S&P 1,500 and look at where they fall in regards to their upper and lower Bollinger Band. I can see that 92% of them are trading above their mid-band, so that's kind of bullish. Not kind of, it's extremely bullish. That means that very few stocks are below the mid-band. Probably getting the point that it's too many. And then if you look at most of these stocks, they're sitting between the 80th and 90th percentile of those bands. So they've come off the top, frankly, because the next two were higher on the preceding 2 days. But still, this market is very, it's been going up for a long time, and most of the stocks are trading near their recent highs, signs that at some point we might expect the market to pull back. Another thing that is built into EdgeRater is an automatic analysis of the Hindenburg. And this signal, which Hindenburg-Omen, which I'm not going to go into great detail, except to say that no major market decline has ever occurred without being preceded by a Hindenburg signal. Now, not all Hindenburg signals are meaningful, and we are looking for groups of them to occur over a short period of time. And automated, this is run on the NYSE, you can see May 31st, June 4th, and June 19th. But we've now gone a month, and we've had no additional signals. And I guess the thing that made the most sense to me when someone described what this means is that the Hindenburg-Omen fires when the little guys like us are buying and the institutions are selling. And that would not be a time when we would want to be going long. So now let's jump into HGSI. Actually, before that, let me just do a quick commercial. And this will probably be the last time I mention this. As I mentioned, I have coded a number of indicators into TradeStation. Now let me say what that really means. It means that I paid a third party to code multiple things that are listed here. I will not be including institutional volume nor the candlesticks, because those are things that people should already have on their own. But the Elliott indicators that I've listed here, Force is built in, so you don't need that either. But the Elliott indicators, the HGSI indicators, Bible gap ups, pocket pivot, and in addition to that, the high jump, I programmed into TradeStation with a third party. And I'm looking for a minimum of 5 people that want to partner on it. And then if I can find that, then I will clean them up. I will copy protect them so they're good for you forever, but only on your TradeStation account, and split the price equally among everybody, probably about $400 to $500 a person. 5 people, I think, would be $400. Obviously, 6 or 8 people will reduce the price. I've had 3 or 4 people show interest, If you have interest, please email me. And then those people that have had interest, I've got you on the list, and here's my email address. No more sales pitches the rest of the night. I don't usually sell anything, but I'm not going to give these away for free since I had to pay for them. Now, I mentioned my watch list. So during what I'm talking about there is, these are not going to show up on this one. I will sit during the day, and I'm able to, on a real-time basis, look for things. And what this is set up is to show me when I get viable gap ups. And when I start to get a gap up and it's above the 50-day moving average, 2 out of those, and then I need the volume. Once I get 2 out of 3, I'll light up yellow under the BGU column. And as the third one comes in, I'll light up green. So during the day, I'm able to monitor and see where I sit. Again, here is telling me if I'm above or below I believe that's the 50 in my program, that's the 200. But it allows me during the day to pick up real-time viable gap ups. The same thing exists on the pocket pivots. This is not the version that I would be sharing. I had to code a new version. This is a version that was handed to me by somebody else. I did have permission to share. During the day, you can see who's having pocket pivots, and as you can see, there were a lot of pocket pivots on Friday. Now, reality, all it's really telling you is the volume signature. You need to look at them and see if they took out the moving averages as described by Morales and Catcher. I can look for green candle lows that are occurring in the middle of the day. And I know from my review, several of these were interesting stocks. I can look at red candle highs that occurred during the day, which would be a bearish signal. If the market's going down, if a market keeps breaking out to new highs, I've learned to ignore those. So I use those, I set up triggers, and I do my trades when I get my alert. All right. For those that are upset that I tried to sell something, I apologize. I don't care if I sell them. I'm just, people wanted them, and I think that's the way I can best do it. So I'm now in HGSI. I'm going to go into Woodward and Brown user groups, Major Markets Plus, top-down view, which is all technicals, but it's looking at 2 or 3 weeks of material and try and get an idea of what's working in the market. So the first thing you notice is that I'm on raw combo. On the top is the NYSE composite. Now, we know the NASDAQ had some, in the NASDAQ 100 specifically, had some real dogs last week, and I suspect that Microsoft and Google and maybe ISRG are in the S&P 100. But the NYSE, which is a large index with big, small, and medium stocks, was the leader. So let's take a look at some of these. The NYSE, in fact, before I do that, let me go back here. And I could see if I look at 5-day performance, oil was up the most, transports, utilities. Now, if you're a Dow theorist, the fact that transports, I think, took out a new high would say that they're confirming the rally. Small caps, NYSE, laggards were the larger stocks. The NASDAQ 100 and the S&P 100, and the NASDAQ 100, I think I noted why. S&P 500 in the middle was half of what the NYSE did. If we look at the last one day, bonds had the biggest move the last day, gold and silver. So that would tell us in the one-day performance the dollar was weak, and you could see the impact of the NASDAQ 100 and composite with those stocks that had such a rough week. So back to the NYSE, and we shut that piece down. So these are my momentum indicators here, the bongos and the force. This is the high jump bar in green. These are green candle lows and red candle highs. If I have a viable gap up, it's going to show up as a green bar here. This is my DI crossover. Here is my price bars. Pink is a pocket pivot down. Blue is a pocket pivot up. I use candlesticks. I use an 8-day exponential, a 17 and a 50-day simple, and a 200-day simple. I have 2 bars of volume. The only reason for having 2 is sometimes my indicators obscure them, and I do care about volume. The top volume bar is giving me a market signal called the Eureka in green and Phoenix in red. These are calculated in the NYSE, and these are our equivalent of follow-through days that you might read about or hear about in Investors Business Daily, a fine magazine, our newspaper and website. And on the bottom are kahunas, red being negative, blue being positive, which may be on an individual equity or index momentum signals. So what do we see here? We see that the NYSE is up, not quite to the intraday highs back in May, but has had a big recovery. And just to play a little bit on the NYSE, I like to do this more on the S&P 500. It's black today. From the high to the low, the S&P 500 in 21 days, excuse me, the NYSE gave us a 9% pullback. And actually, that's not fair, is it? We get rid of that and do that again. That was too much. Nope, 9.0 in 22 days. Since that time, we closed at the high on Friday, 9.0 over 18 days. So we have now got back what felt like a more painful correction that occurred in late May. If you look at from the low of this run, we have now moved up in 167 periods, 22%. So the NYSE continues to push harder, attempting to break out to recent highs. It's at a closing high. I don't think it's quite at the intraday highs that I have here. A couple of pivots, pocket pivot days on Friday, very strong looking. Everything's green on the momentum, not up at the top of the high jump. You can see when you get to the stretching, and the high jump measures the cumulative distance between the price and the 200, the 50, and the 17-day added together. And when you get to points of peaks, you have a tendency of the market to pull back, and we're not at the peak yet. That's the NYSE. If I look at the S&P 500, you can see we do this analysis on the degree of the pullback. It does look like it's taken out prior highs, and it's out to new highs, mostly green above. No volume on this, so there won't be force index. So the S&P 500, strong, breaking out to new highs after that pullback. We look at the small caps with the Russell 2000, perhaps the strongest of the bunch. Again, breaking out to recent new highs. We look at weekly. Bring on more. Here's going back a long time. So at least since 1990, the Russell is at an all-time high, which is just a point that I'm pointing out here. So took a long time to get there maybe, but the Russell is at an all-time high. Everything is green, very positive week. A little bit of weakness on Monday in the market, and Tuesday, Wednesday, Thursday, Friday, closing at the high of the day each day. Still very bullish looking. I like to look at the NASDAQ 1500, excuse me, SP 1500, because it includes big, medium, and small. And last week I talked about, it looked like we were in a trading range, as I wrote here, and questioned whether or not we can break above. We broke above. Now the question is, can we stay there? And it'd be interesting to see, because a lot of times prior resistance turns into support. And we'll see if that bar holds this week. If we look at volatility, it's been weak and weak and weak and weak and weak, and it's starting to get down to that place where it doesn't like to go much below. And you can see it's much closer to the lows than their highs. And we could go back years. This is going back 3 years, 4 years, and you could see of late, you get a few spikes above the 200 here in April 2010, here in August of 11, and we can't even get above the 200-day moving average. Let me get off the weekly. My bad. You know what, I just looked at all the others on the weekly. Well, it won't change anything. We can't even get above here, as you can see, the declining trend line. So I apologize, I was on the weekly charts, and let me just real quickly see if anything's different on. It looks the same way, but you could see even better the lines that I drew here. And if you look at, just out of curiosity, the S&P 500, again, breaking out. And I guess that was weekly, and it is above it on a daily. So that's the market that we see. Obviously, all these are strong except for volatility. The dollar, you know, in a big, wide trading range, has pulled back quite a bit. You would think that gold and silver might have bounced with the dollar pulling back. And gold and silver are in a horrible downtrend with this 50-day being a pretty heavy blanket. And they're going to have, in my mind, get above that and stay above it for me to believe anything is going on with gold and silver. And as I said, I don't like to buy stocks or equities that are trading below their 200 or, in this case, or their 50-day moving average. Oil is interesting in that it's behaved a lot better. In fact, maybe too well, as I paid over $4 a gallon for gas today. Oil is probably being driven. I heard someone say there's at least $10 a premium because of what's going on in Egypt, in Syria. Oil is an interesting place. Tell you, a lot of oil exploration companies. The charts didn't necessarily look great, but a lot of them showed up on my weekend review, suggesting that some of these high oil prices are going to translate maybe into some beats, like Anadarko Petroleum, Apache, were some of the ones I looked at. Some of the smaller ones I think look more exciting from a chart pattern, and we'll look at some of those in a little while. So that's the major market indices. Next thing I like to look at is industries. And you can see there's 146. Force up is 68, so that's down from last week. Force down is 22, that's up from last week. So those MLPs and REITs are, you can see a lot of REITs are underneath here. These are stocks that are tied to interest rates, and they're suffering, as are some of the, not just the gem metals, gold and mining, but steel, aluminum, coal has been weak. Trucking, which had been nice, pulled back some this past week. So that's where it's not working. But since I'm still leaning long, what is working? Raw combo, there we go. So you'll see, interesting here, that gold popped up. I'm sort of scratching my head on that one. So what we're doing in this view is we're looking at the force index. Now, the force index, and I'm assuming that all of you know what all these things are, which may not be fair, and I apologize if you don't. And I have done, I recently did a program where I actually tried to define all these. So force index looks at the volume today times close today minus close yesterday. Two drivers of force index, volume and change. Volume is a much bigger driver. So if you have things like American Barracks and Newmont Mining that trade a lot of shares, it doesn't take much of a change in price for them to come up near the height. Now I commented on Sarkit as being, this is John A. Sarkit, option wizard. He has the 7 trading rules, and when the 13-day is above the center line, bulls control the market. And I like to look at when the 13-day is green and the 2-day turns negative. That tells me a pullback, and those are the things I put on a watch list. That's one of my ways of finding stocks. So all we're looking here is what the 2-day force is. So it's measuring just the last 2 days at exponential moving average. So more today than yesterday. And it tells me the big movers. And you'll see on the banks is another volume. So we ignore the first one because that's just the index group. So Bank of America, I have some of this. It had positive earnings. The earnings are this week. But you could see Bank of America is in a big run. Interestingly, not at the top on its high jump bar, and the reason for that is this was a relatively, not flat, it was ascending, but it gave time for the moving averages to start to close up. So if this continues to go up, then the high jump may come into play. Everything is green, multiple pocket pivots. I think JP Morgan maybe came out this week with earnings that were positive. People are certainly expecting positive earnings from JP Morgan, and it's certainly a leader here. And you could see earnings coming into the stock. JP Morgan also in a nice uptrend. And frankly, if you want to buy the stock at a good time, it's to buy it once at the 50. But it's pretty close to the 50-day moving average here as well. And then Citigroup is the other in the top three. All these are lower left, upper right. The one that looks to me like it's behaving the nicest is probably JP Morgan and certainly Bank of America. Where did that one go? Whoops. Although Bank of America is starting to look like it's going to get to a point of being extended. So I'm going to close that. And I'm going to right-click, go back. As I mentioned, a lot of gas and exploration. There's Anadarko and Apache. These are all interesting stocks. I guess as I look at this list, there's a lot to like. Many of them showed up on my review this week. APC, APA, PXD, and COG are probably the best of the best. And with the hot summer, gas prices have gone up, and that's helped to drive all of these natural gas prices. Here's Anadarko Petroleum. It makes money, lower left, upper right. Looks like it wants to run again. Expensive stock, breaking out above recent highs in a good sector to be. Here's Apache. Had pulled back to the 50. Now this is one that I find more interesting if I wanted to buy. It's an expensive stock. A pocket pivot, DI crossover, turning green on momentum indicators, and a kahuna in good volume. Now the volume looks like it's a negative because it's red, but it's a big up day. It was up $1.38 on nearly 6 million shares. And it closed below where it opened and therefore painted red. But it's a pocket pivot up because it's an up volume. It's an up day. That looks very interesting. I might want to look at it as a weekly. And I see a stock that's under the 200 weekly or 1,000-day moving average, but seems to be getting, it's be a nice point bouncing off the 50 weekly or 200-day and moving up. Certainly looks attractive. You can see it's been as high as 132 back in 2011. Not much in the way of earnings per share growth. I think these stocks, many of them are moving because of the price of oil and the rising price of natural gas. Penn West, a smaller company, breaking above the 200. Now, don't know this one, doesn't meet the parameters that I like. On the other hand, you got a nice bottom setting up here. Broke above the 50. Natural resistance will be at the 200, but that's another 50% from here. A couple of kahunas in the last couple of days. Everything turned green. This is on the weekly chart. On the daily chart, it's breaking above all the moving index averages, but the kahuna might be interesting. Sandridge Energy, they talked about this on the Alpha, on CNBC, was doing the Alpha conference in New York last week. And one of the experts said that he would buy Sandridge Energy. It was his pick for the highest gain. Then he also said it could also go to zero if oil and gas prices plummet. Don't know how to explain the upsies and downsies of their revenue. I don't know if they sold an asset here that might have explained it. It's below the 200-day. It's not what I like to buy. Cabot is what I like to buy, and I have a position in this one, and it looks like it wants me to buy more. Great earnings per share growth. It's been sideways for about 5 months, sideways to a slight uptrend. That 50-day has been great support. It looks like it wants to move up here. The weekly bongo is still red. Another up week, it will turn green. It had a kahuna on Thursday. This is a pattern I like, sideways, a squeeze with the 3 moving averages coming together and breaking above it. Devon Energy, you know, a stock that's been in a downtrend, broke above a confluence of moving averages, perhaps with a pocket pivot on Friday. It's a very attractive looking group, and let's look at PXD, and then we'll move on. Another one in a long-term uptrend. I think it wants to have another leg up, makes money. Beautiful stock. Would have been a beautiful stock to have bought, breaking above its 50-day here with a kahuna and a pocket pivot and a DI crossover. But coulda, woulda, shouldas. And I mentioned Cabot. I think I already showed it to you. Yeah, Cabot is my favorite, I think, of this bunch. As I said, it's one that I own, and I do love its earnings growth. As I mentioned, biotech is always something that I'm a fan of, and I've told you every week to buy Gilead. Gilead is a leader in HIV, a emerging leader in Hep C, and wants to be a leader in oncology, cancer care. I think this is a leader of the next 5 to 10 years, kind of a few years behind where Celgene is today, and perhaps what Amgen used to be, which means somebody might buy Gilead. It's not a cheap company. See, the market cap is about 100 billion, so I doubt anybody's going to be buying them anytime soon. But Gilead, so take back the comment about buying. I don't think they're probably too expensive to be bought, but they are a major leader in biotech. Had pullback with all the pocket pivots last week. Everything has turned green. I think it's up and array, and you're going to see some earnings coming in over the next couple of years in this company. Amgen, you know, from a chart perspective, it looks great. It pulled back, broke above the 50, which would have been an interesting buy point here. You notice my momentum indicator started to turn green with that kahuna. Pocket pivot on Thursday and Friday. Everything turns green. Looks like it wants to go up. Biogen IDEC pulled back, sitting pocket pivot off to 50. Might have been a good time to buy on Friday. Opens up on Monday. Still attractive. Don't know Cubis from Adam. A lot of interest there on Friday. Big volume. Kahuna. Pocket pivot. I looked at it. I looked at its fundamentals, and I scratched my head. I don't get it. Regeneron's been one of my favorites this year. It broke above the 50 here, which I think was the day that Amgen put in their bid for Onyx, or maybe that was back here. But the biotech spoke up because of some increased interest in mergers and acquisition. Earnings per share were great. They look like they're slowing down. You probably want to do some research here. But Regeneron certainly been a leader. Sanofi has a big position in them, probably hurts their likelihood of being purchased by others, but they've got a great portfolio of products, especially in the eye world. Don't know this company at all. It's below its 50, although it looks like a squeeze in a pocket pivot. If it broke above the 50, might be interesting, but giant volume, a kahuna, and a pocket pivot gets me interested, and a green candle low. So a number of reasons to pay attention. However, it's still below a downtrending 50 days. I need to do my research. This here is the industry group. You can see the strength in biotech. Infinity, they have a cancer product and other things. You know, I have in my portfolio a number of stocks that might look like this. And I buy them when they're cheap, usually when they're cheaper than 18. I pinch my nose. I put very wide stops on them, and I hope that they come back to some of their former glory. If I felt that was possible here, and it might be, I see a pocket pivot and a kahuna and a DI crossover. I know where to put my stop. I could even put my stop up here around 18 at the low of the prior day. Something's happening with Infinity, and I might want to get interested in that. See if there's anything else here. Vertex, what a beautiful chart breaking out. doesn't make much money. They have a hepatitis C drug that's supposedly the cat's meow. They also have some cystic fibrosis products. This gap up here, Bible gap up, occurred when they announced some data on their cystic fibrosis product. You notice how the high jump was hit. Notice how it fell and went sideways for about 4 months. Notice now the high jump is down and the stock is moving again. Vertex, VRTX. Celgene had a great day, and then it's gone sideways. The great day was some positive news. The sideways and pullback was on some negative news. Probably would be if you own it, I'd keep it. If you don't own it, I'd wait for earnings. I own it. I also, when this happened, I got nervous, and I sold 150 calls and bought 130 puts, so I locked my price in to get through this earnings period. I suspect I'm going to lose some premium on there and not lose the stock. But I got nervous. I have a big position in this, as people who follow this know. Lastly, Alexion, kind of all over the place. A lot of discussion about Roche, whether Roche is going to buy them. Roche previously bought Genentech. They have a market-leading oncology biological product line. Alexion has an incredibly wonderful product for a small number of patients that suffer from a disease called paroxysmal nocturnal hemoglobinuria. It's an orphan drug that allows pricing close to $400,000 per year with some likelihood of expansion of indications and label. It'd be an interesting acquisition for Roche. Probably not cheap. Let's see what the market cap is, $22 billion. Be interesting to see what happens here. That's what this gap up was for, was that potential. Enough of biotech, a lot of excitement there, a lot of good stocks. Let me just show you a couple of things. I mentioned that I buy things and pinch my nose. Here's one different pattern. I wish I did buy it at $2.80. And if I give it more space, less space, Jeffrey, use the program. You can see that this is a stock that in 07 got up in the 20s. And you can see it's been in a major downtrend until something happens here. So I spotted it at $2.80, and I got into the stock, I think, on this day, nope, I got into the stock here. And it made one of my screens. I don't remember what it showed at the time. And it's one of those stocks, I looked at it and I said, oh, it was a mobile breakout from a squeeze. All right. You notice the moving averages are squeezing here. It showed up as a mobile breakout. And I read about them, and they had a study of an inhaled insulin. It worked, except the FDA required some more testing, not proving that it works, but more on safety and the manufacturing process. So I now own a big position of it. It's run from 2.8 to 7. I should have sold it up here. It looks like it might be setting up another buying opportunity. Another one that I got into in a similar story, and it's been talked about on the board by others, is, and probably remains a good story, is Celldex, a company that has licensed products. And this was a Morningstar occurring down here on the 50, crossed above here, which was a time for me to jump in, the DI crossover. And they're going sideways. This is a company, again, doesn't make money, doesn't have much revenue, but has an interesting oncology product portfolio. I'm an oncologist, at least I was before I retired, and I pay a lot of attention to the cancer companies. Take a look at gold. And remember I meant, look at, there have been substantial moves. Gold has gone up, grain of salt, but gold has gone up 23% in the last 2 weeks. More importantly, it trades 16 million shares a day. So the gold stocks are being driven by a modest change in price. Here the price change was 80 cents, which was 5%. But it's the volume that gets it into the force. So American Barracks, gold core looks a little interesting where it had a little flag on the 50. It looks like it's running. And the next one here is Newmont, no surprise. The problem with all three of these is that they're still well below their 50-day moving average. At some point in the near future, gold becomes attractive again. I just don't know when that happens. You buy at your own risk. At some point, it's the right time to buy. GE is probably driving industrial conglomerates. You know, the earnings per share growth in this company doesn't look that exciting. Their commentary at their analyst call got everybody excited, and I'm used to seeing little companies I never heard of with Bible gap ups. Two pocket pivots in the day before earnings, and then earnings day, Bible gap up on Friday, big kahuna, gigantic volume, some murmuring about some acquisitions such as Halliburton in the marketplace. You know, is it extended? Yeah, it's up near the high jump, but you know, sometimes stocks like this want to go higher, and this might be one to watch. The next one on the list was 3M. Don't know much about what's going on with this. A couple of pocket pivots, everything is green. Don't usually see GE showing up on a Bible gap up. Pharma, look at Pfizer and J&J. Great companies that pay a dividend. Pfizer, you know, if I speak what I preach or do what I preach, I don't like its earnings growth. That bothers me. Have been in an uptrend, and I'm going to show you a great uptrend. Peaked with the downtrend in late April, early May. Deep pullback, broke above its 50-day moving average out of a squeeze on Friday with a big kahuna. Looks very compelling down here, and it also pays a dividend of 3.3%. You want to see what a leader looks like? Here's J&J. That's a leader, lower left, upper right-hand corner. It looks like it wants to go. Again, not much in the way of earnings per share growth. Pays a 2.9% dividend. As the price goes up, the dividend will get smaller. One that I'm going to pay attention to this week is Activist, which is the old Watson Labs, generic manufacturer. I love these sideways patterns, and then I look for something to happen. So you've got a squeeze of the 17, the 15, the 8-day exponential in a stock that was a leader, some merger and acquisition discussions. I believe they bought WCRX. Look at the earnings per share growth compared to the other guys we looked at, the Pfizer's and the J&J. Probably higher risk, but you put your stop not much more above the 50-day moving average, or you wait for it to break out of the squeeze. I think this looks like an interesting stock, and I suspect if we go and look at, see if I can find, it's squeezing here. You can see the Bollinger bandwidth has gotten tight. So we've got a volatility squeeze perhaps coming in here. And you can see how there might be an opportunity on Activist. Now, you can wait. You don't have to buy it right now because I think it looks interesting. In fact, you probably would want to sit on it and let it declare which way it's going to break before you want to get in and do anything. Here we go. All right. I know it's starting to get late. And believe it or not, this is my 28th wedding anniversary, and I'm doing this, and my wife is next door in the other room. That's what you call a great wife or a stupid husband. Here's PNC Bank. The regional banks, as picked up by both me and Ron, have had a lot of strength. PNC, which the reason I know who they are is because Schwab uses them for their cash. Nice lower left, upper right, lots of green. Certainly have been moving in the market. Don't love the earnings per share growth on this one. Pays a 2.3% dividend. Here's T-Core. I own some of this. We'll pull back into Thursday's pocket pivot off the 17-day and moving again. The earnings don't look exciting on this. The loan origination was tepid, but all these companies, when they talk on their analyst reports, are saying how rising interest rates will be good for them. So I'm expecting rising interest rates. Regional banks have been sitting near the top of the list for a while. I know one of them, I think Western Alliance, we talked about before, had great earnings come out this week, and you could see it pop on Friday on its earnings. Sideways, kahunas, and the stock took off, DI crossover. Oil, gas, equipment. Schlumberger had great earnings, and you could see a Bible gap up. Probably want to watch this stock and others in the sector. Oil prices this high, gas tricking up. Maybe these guys are breaking out of their funk and their trading range. And this went back to January of 2012, and it took out those highs. So something that you might want to closely watch is Schlumberger. Halliburton reports, I think tomorrow, similar pattern without the big jump up. Also showed some interest on an M&A front with GE being mentioned as a possible acquirer. National Oil, Farco, got to bring in more stock to show you what I think on this. So this is one that's been hammered, broke above its 200-day pullback. Looks like it's running again. Don't love the earnings per share growth. Pays a dinky dividend of 1.4%. Love the way that this looks, though. Broke above the moving average. Pulled back. This should all be great support underneath the stock. That's about 6% away at $70. I know where to set my stop. These guys are, if the oil industry continues to pick up, these guys will gain, and look at how their revenue has gone up despite the fact that their stock price has been tepid. A lot of these made my list this week, things to take a look at. Lastly, integrated oil and gas companies. They look at interesting points. Here's Exxon breaking out to new highs, all green on the indicators. The earnings per share growth, not very exciting, pays a 2.6%. Chevron breaking out. Hess breaking out. Wolfpack all behaving the same way. So that's the top 10 leaders. We mentioned a few of the downsides beforehand. What else do I like to do in the last 5 or 10 minutes before I say goodnight? I like to look at the group inclusion filter. So I've already ran a group inclusion filter today, but let's do another one. So let's look at, this is something you can all be doing yourself. Now, it's now 10:58. I just ended my top-down review, and now let's see how long it takes to find 10 good stocks. I go into Tools, Group Inclusion Report, Smart Groups, make sure everything's clear. Morales and Catcher, I like Bible Gap Ups. I like Pocket Pivots. In Woodward and Brown, I like Best Criteria, ERG, Growth, HS100, Leaders, QEPs, Stocks and Groups to Upside, Strong EPS. So I make a group for the report. We're going to call it AAA, GIF, 7.21.13, and I want to look at the top 10 stocks. I'm going to hit OK. It's going to look at every one of those lists, and it's going to tell me which stocks make it in the most lists. Here they are. Pharma, great earnings play, and oil. So this is a top-down approach. There's some overlap. Gilead is here. Let's take a look at some of those real quick. I go into my database, and here it is. I just made this. Warehouse. Let's take a look and see if any of these look interesting. So here's Regeneron. We already looked at it. We already said it's interesting. Here's Continental Resources. I think I talked about this last week. Loves to be above 100. It's going there again. This is CLR. It goes in the E&P group of oil and gas exploration and production. Great earnings per share growth. Not a cheap stock. Moving up. Certainly a leader. NASTEC. Electrical, water, sewer, pipeline, and communications. Lower left, upper right, pocket pivot on Friday, mostly green. Earnings slowing down. I'd want to do some research, but certainly a leader. Santaris, one of my better picks when I called it back here, I believe, or one of these days, and it had a big move up the next day. Continues to be a nice move in an uptrend with good earnings per share growth. It's a pharmaceutical company with earnings per share growth. Certainly I would consider this to also be a potential takeover candidate. It's got a market cap of $1.6 billion, and it makes money. Drugs might not be that exciting, but it makes money, and it's got a cheap market cap. Owen Financial, the mortgage servicing industry, seems to be showing some life. There's this one. There's WAC, WAC, and I think NSM is the third. Look at that earnings per share growth. We've got on assignment, temporary help, big move up, pocket pivot on Thursday. Multimedia games, and I looked at this down here with the double kahunas, pulling back to the 50, and I have MPEL and LVS in my portfolio. I couldn't put another gaming stop. I wish I would have sold LVS and bought this one. It's had a beautiful move, but I still like the others. The reason why I didn't is the others have better earnings per share growth. Cooper Tire and Rubber, this is a takeout. Goodyear Tire is, I think, a value play. Homeowner's Choice is a insurance purveyor. I used to own this. I got out because it's got slowing earnings per share growth when you look out at the next couple of quarters. What a nice run, pull back. Is it running again? I think it's going to lose its earnings power, but it certainly had a nice move, and for the short term, it looks very strong. Quidel, they make vaccines. My friend Charlie probably hates me because when I got him into investing, he sold off his Quidel and bought other portfolios, but that was also about 5 years ago, and the stock did nothing until recently in a nice move. So I found 10 very good stocks in 4 minutes by looking at the group inclusion filter. Let me look at my buy list and see if there's anything else I want to point out before I say goodnight. So one thing I might want to do is look at the industries, because I saw a couple things here. Asset managers. Now NSM counts in this group. It's more of a mortgage processor. I own some of Blackstone. Let me show you why you might want to consider it. Lower left, upper right, pull back, multiple pocket pivots, kahuna, everything turned green. Great earnings per share growth. Still pays a 5% dividend. Also in this group was Wisdom Tree Investments. Best thing about this is Maria on the original CNBC babe is married to the CEO of the company. I wonder if he was a guest host. But you could see pull back to the 50, several pocket pivots, great earnings per share growth. So asset management looks interesting. We mentioned biotech. I don't remember much about PDLI, except I like the pattern. It makes money with earnings per share growth increasing, pull back to the 50. I like to see it come in with a kahuna, pocket pivot, Bible gap up, but I like how it's setting up. So that'd be interesting for me. Here's Melco, one of the gaming stocks. Oil, gas, equipment. We looked at Halberton, National Oil, and Schlumberger. On the oil, gas exploration, I pointed out Cabot. I looked at 2 cheaper stocks because some of those others were expensive. EPL is one that I own. Bottom, Cup, I guess a handle, pocket pivots, VI crossover, great earnings per share growth, does not pay a dividend. That looked compelling to me. And then Oasis is one of these high flyers, great earnings per share growth, breaking out smaller stocks and some of the big guys. Lastly, I've talked about the pharmas, activists, Pfizer, we mentioned earlier, J&J. I've also been a fan of Valiant. Every time it pulls back, it seems to get another leg up. Like activists, it's gotten muddled with some of the M&A discussions going on, but still shows some pretty good earnings per share growth for a pharma stock. Now, what I do is I do top down and I do bottoms up on the weekend. I looked at 500 charts. These were my top 50 charts from my weekend review. I then look at these and I categorize them, which helps me follow them during the week. And I put them into certain categories. The Bible gap up stocks, breakouts, these are stocks with great earnings. VIPS, 2 weeks ago, at the end of my call, I said, I'm actually buying this stock, although it violates my 50-day rule. Or maybe it was last week, and it just popped after I said that. It was last week. So that was one. I still think it's got room to go. I'm an earnings man, and there's lots of earnings in this stock. Leaders extended or gone are things like Gilead that are probably too extended, but I think Gil Morales last week, not this past week, but 2 weeks ago, said that the extended word should go away. Pullbacks ready to run. These were big winners last week. These are stocks that have pulled back to support and have had a kahuna come in, a pocket pivot, big volume, a Morningstar, something that tells me they're already moving. You might look at several of these. I already showed you Santeris and Regeneron, NSM, and OCN, EPL, Halliburton, Louisiana Pacific, although it's, I think, below some of the moving averages. These are pullbacks that I'm waiting to show me something. 3D systems, I'll take a look at that before we go. Some of the home builders. And then bottom fishing, I looked at Flagstaff. So let's just look really quickly at 3DO and Flagstaff. The 3D stocks have been darlings. This one's gone sideways to the 50. Three moving averages coming together there. High jump is down. I think earnings are coming soon. Let me check that. I don't have the calendar activated. All right, I'll have to set this one up with the calendar. Check the earnings. Sideways, squeeze. Sector is hot, makes money. I'd be watching this stock. It's not cheap. It trades at a multiple 2 times its growth rate. But this Stratasys are darlings, and this thing held up well despite the blow up of X1. X1 was a new entree in the same group, and you could see it had a massive move up from 28 to 72, and it pulled back. Maybe it's done falling. The other guys held up remarkably well. And if this is Flagstaff, we'll be done. If not, we'll be done anyways. Let's see, F, B, C. Here's, again, sometimes I buy things and I'm too early. Sometimes, but here's a stock that's based since March. Its earnings, if you look at out a couple of quarters, are going to start to increase. It's a regional bank that's gotten clobbered, but it broke above that 200-day. The 17, the 50, and the 8-day exponential are pointed up. It's an early buy. You got to pinch your nose, but I bet you if we look at this in 3 months, it went up as well. But remember, that is a bottom fisher, low expectations, but high rewards when I'm right. Here's my list on that moment. I thank you all for watching. You all have a great night, and I hope you make money this week, and I hope we do this again next week live. I'll talk to George about doing one Sunday evening in 1 week live. Hopefully we can get that done. Thanks, everybody. Have a great night, great week trading, and see you soon.